193. Before you get too excited about possibly a second day of rallies for the U.S. stock market, joining us now is a man who believes the bubble is about to burst in the market. Here is best-selling author and economist Harry Dent. Harry, you're going to pour cold water on this morning, this rally.
Yeah, I have to. You know, I was bullish for the entire 80s and 90s and 2000s because we saw the baby boom, earning and spending more money. Now, since 2008, they're in a downward spending decline, just like we saw generations down from 1969 to 82, 1930 to 42. So when generations are not spending money, we get extended downturns in the market, and we've had QE, you know, up until late last year to try to offset this, but now it's wearing off. So, yes, I think this is the beginning of a broader crash. A broader crash. What does a crash look like? What sort of sell-off are you calling for, and how long will it last? Well, let me give you the simplest pattern. Every bubble we've seen peak, 2000 and 2007, has taken us to new highs. Every crash has taken us to new lows. It's called a megaphone pattern. So I see the Dow having peaked here at 18,300. And the next stop down would be about 5,800 to 6,000 about a year and a half or so from now. So I know that sounds dire, but it's only a little lower than we went in the 2008-9 crash.
I got to get Tony in here because you're going to get challenged on this.
Well, I'm going to challenge the concept of having a sustainable and significant equity market decline absent a shutdown of credit and negative economic data. So that there's a huge difference between 2000 and 2007, and that the Fed has not been raising rates, the yield curve is not inverted. And I think you have to also take into context the spending of the millennials, which is coming up. As you know, I remember working early in the early 1990s with you when I was at Beige. And the thing was that the baby boomers were coming into that huge spending demographic. The millennials are the same size as the baby boom demographic, and they're going to be increasing their spending significantly over the course of the next 10 years.
Tony, half of them are not even in the workforce yet. I understand demographics better, I think, than anybody on the earth. And yes, the new generation's coming up, but they're not enough to offset the baby boomers. The baby boom is the largest generation in history here and around the world. And people aren't in Japan. Do you remember how Japan's markets collapsed in the 1990s, which only I predicted back then because we saw this decline.
They didn't have an offset of the millennials.
They're still in difficult times, and real estate is still down 60% 25 years later. You know why? Because there's more old people dying than young people coming along buying homes.
Harry, you're predicting, Harry, it's Dagen McDowell. You're predicting a crash now, but you wrote a book, The Great Depression Ahead, published in January of 2009. So people who follow you missed a 150% move in the Dow. They missed a 270% move in the NASDAQ because you've been negative since 2009.
Are you on our newsletter? Obviously not.
Do I have to pay for it?
We predicted that downturn. That book was written in early 2008. We said the market would turn around, and we've had people mostly invested.
When did you say that?
And we've been saying that since early 2009.
No,
we have this thing called
the book's title was The Great Depression Ahead. So you basically predicting the Great Depression was going to start this year.
We did have a depression starting to happen, and we've had $4.5 trillion
we
that said no.
came out of a recession shortly after your book was published.
Exactly.
Out, not in.
Exactly. That's why I have a newsletter.
All right. Yep. So, Harry, so bottom line, what are you seeing today? You're using history as a reason why you're calling for this market to crash, okay? Is there anything that's different about today, you're talking about the millennial generation, that might throw off your analysis, that might not make history a good predictor of what is about to happen with our stock market?
Well, again, I mean, we look at the things you can predict. You can't predict short-term trends, are very hard to predict. But long-term, generations spend money than they don't. If it weren't for $4.5 trillion of quantitative easing and about $12 trillion around the world,
all right, so where do we finish the year? Stock market, looking at the S&P 500, for example, most use this as a benchmark. Where does the S&P 500 finish percentage-wise on the year?
You know, I think it could be down 20 to 30% by year. And the reason we're in what we call the crash season between mid-August and mid-October, where you can see more radical crashes like we're seeing here, and then it'll rally and it will keep stair-stepping down. So this will not be straight down. You are making this call
ahead of the month of September, which seasonally is the weakest month, one of the weakest months for the stock market. So I am looking at the timing of your call. It might look good because we do tend to sell off in September anyway, but that's why that year-end call is most important. Harry Dent, thanks for joining us.
Sure.
All right.